Canada's retail sector is taking another big blow. Nearly 2,400 jobs gone as another big U.S. company says it can't make money north of the border. Nordstrom is pulling out of Canada, less than 10 years after the luxury retailer arrived here with great fanfare. Megan Fitzpatrick is at one of the Nordstrom locations. That's Toronto's Eaton Centre. Morning, Megan. Tell us about the decision announced yesterday by Nordstrom. Why is it leaving Canada?
Yeah, a couple stores here in Toronto, as well as across the country in big cities like Vancouver, Calgary, Edmonton, Ottawa. They operate 13 stores in total in Canada, 6 Nordstrom stores, 7 Nordstrom off-the-rack stores. And as you mentioned, they opened here in 2014. And Heather, according to court filings, they've never made any money since they've opened here. In a statement from Nordstrom's CEO, he writes that they entered Canada in 2014 with a plan to build and sustain a long-term business there. Despite our best efforts, we do not see a realistic path to profitability for the Canadian business. So they intend to wind down their business here over the next couple of months. They will be going through a court process to do that. Of course, the retail sector was so hard hit by the pandemic, and in conjunction with that, a growth in online shopping as well. But they're not the first major U.S. chain to come to Canada and close up shop a few years later. People might remember when Target arrived in Canada to big fanfare. And this retail analyst we spoke to says sometimes U.S. chains just don't work here in Canada. They are different markets. Take a listen to what he told us.
I think a lot of U.S. retailers may enter the Canadian market believing that the same things, the same tactics and tools that they use in the U.S. to drive consumer interest in their brand, to drive interest in their promotions and their sales and their products will be responded to in the same way in Canada. And I think oftentimes they're disappointed.
And this news about Nordstrom comes just a little while after we got news that Bed Bath & Beyond, another major retailer from the U.S., is closing its Canadian stores, 65 of them. So that chain's going to be gone from Canada as well. So obviously this is having a huge impact on the hundreds of employees, Heather, who are going to lose their jobs. As you mentioned, just with Nordstrom alone, over 2,000 people expected to be out of work. It'll also have an impact on big malls like the Eaton Centre. The Nordstrom store here, a big footprint within the mall and some of the other malls across Canada where they have their stores too. So these malls will be on the hunt for new tenants as well as a consequence of this decision by Nordstrom.
Up online just moments ago, Megan, Nordstrom posted a note to its customers telling them what remains in place and what's going to happen as it winds down its Canadian operation. What does all of this mean for Nordstrom shoppers here?
Yeah, it means you can't go on their website and shop anymore, because that is the message you get when you log on to their website. Online shopping was shut down immediately yesterday. For customers who have already ordered online, their existing orders will be filled, but no new orders will be accepted. It means there's going to be big sales at these stores. Liquidation sales expected to start later this month, pending court approval. Heather, people who have gift cards, they will be honored until those sales are over, but no new gift cards will be issued. In terms of what shoppers think about this, well, our colleague spoke to some yesterday. Here's some of what they were telling us.
What's going to take its place? And the retail sector has changed so drastically. Will such things like this even still exist in the next 10, 15 years?
I think it's really sad. I think that they have such a big footprint here at the Eaton Centre and at Yorkdale that it's going to be really hard to replace them.
I just ran into a friend of mine too, Heather, who said she was, quote, devastated that Nordstrom would be closing here in Toronto. So definitely some disappointed shoppers, those who like these stores. They've got a few more weeks to shop here and then it'll all be over.
Megan, thank you very much, and we'll be back to you next hour as you continue to talk to more people there right in downtown Toronto. But let's bring you some more reaction to this. The key line from Nordstrom's CEO in that initial statement yesterday: we do not see a realistic path to profitability for the Canadian business. Retail analyst, the author of Retail Before, During and After COVID-19, Bruce Winder is with us this morning for some expertise. Bruce, welcome, and nice to have you on the program today.
Thanks for having me on, Heather.
Let's look at some of the main reasons for Nordstrom's decision. The Canadian business, we do not see a realistic path to the profitability for the Canadian business. What is the factor of the Canadian retail landscape itself, Bruce?
Well, I think the issue for Nordstrom is that they came in here and they probably misjudged how big the Canadian luxury business is. It's a lot smaller than they probably thought. We're very different. You know, we have wealthy people in Canada, but not as many wealthy people as in the US. So it's a very different footprint. In addition, what we started to see happening for the last few years in luxury is that the brands that you see in these big luxury stores, they've sort of went out on their own and opened up their own store and sell consumers directly. So, you know what? The numbers just didn't make sense. You know, when you look at the overhead and the sales, the math just didn't work.
So you're talking specifically of the luxury market. Megan was mentioning Target's decision a few years back, Bed Bath & Beyond about to go. That's a different part of the retail market as well. It's specifically not a good fit from the luxury standpoint, Bruce?
Yeah, that's what this is about. I mean, Nordstrom is really a luxury retailer, right? Sort of, you know, upper, mid to high. And it's just a different world. You've got Saks Fifth Avenue that's here. You've got Holt Renfrew, Harry Rosen, you know, upper end of the Bay. Retail overall is not in bad shape. I mean, it's changing a lot during the recession. Value retail is doing well, but luxury retail is doing quite well as well. You know, people who are well-heeled didn't get impacted as much during the pandemic, and some of the headwinds we face now don't impact them as much. So luxury is doing well, just not through Nordstrom, not through this type of channel.
Through this one. One of the shoppers to whom Megan was speaking there mentioned this. What about the department store model itself and the pressures it is facing? To what degree was it a factor here?
Well, I think it was a big factor. I mean, if you look at, 30, 40, 50 years ago, the department store sector was everything. Now it's dwindling. You look at what's happening in the U.S. and Canada. You know, the Bay is slowly starting to close stores. Eaton's was once here. The department store sector is not a growth sector. It's a declining sector. And even within luxury now, as I mentioned, these big brands are developing their own stores. So I think it's starting to wind down.
And what about the economic situation in the United States? Nordstrom is based in Seattle, looking at the domestic market for the year ahead. To what degree is the U.S. economy a factor in this decision?
It's actually a major factor because what's happened in the U.S., that's, a massive 97% of Nordstrom sales are from the U.S. And the U.S. Is a tough market right now for Nordstrom. They had a really bad 2022. Sales were down, profits were down, inventory was up. They've got an activist investor, and this all amounts to massive pressure to do something, to right the ship. And what companies do is often when they're in this case, they sort of close down different divisions. If they have an underperforming international division, they'll throw it by the wayside just to show that they're taking action, that they mean business, and that they're going to turn the ship around.
So basically, I mean, I think, unless there's something else to add, are those the main factors you see behind this announcement from Nordstrom? I'm wondering if, as we look at this, if there's anything in the picture. You mentioned the other Canadian luxury retailers for Holtz or for the upper end of the Bay, the other companies. Is there anything worrisome in this announcement that may reflect on Canadian retailers?
Well, I do worry a little bit about the Bay. I've always worried about the Bay. I think they have too many stores. And I also worry about Saks Fifth Avenue. I wonder if Saks is going to go away as well. Now, they're owned by the Bay, the Hudson's Bay Company, which is private. But, I'm sure a lot of people are waiting for the other shoe to drop now and say, okay, does this mean Saks is closing too? Or will the business from Nordstrom go to Saks and be enough for them to make a go of it? These are all the questions we all have right now for the next few months and years.
And of course, at the core of it, Bruce, nearly 2,400 people out of work when it winds things down finally at the end of June. Thank you very